we think that we're entering a summer soft patch. I think the data kind of just confirms and reinforces our view that the robust Q1 GDP growth story that we saw is not necessarily sustainable, that Q2, may be a bit softer, if not a little bit below trend, but that doesn't really worry us all that much. We think there's still plenty of time left on the economic cycle clock. In the short run, definitely trade, tariffs, and Trump are kind of the overhang. So we'll have to watch that really closely.
David, did the Fed in its statement start to turn the big battleship toward an eventual rate cut maybe later this year, or was there anything really in there that was a signal of any sort?
Well, look, the
language, in short, the language sounded a bit beige, to be honest with you.
The markets were already starting to price in, Fed easing long before the Beige book and actually long before this Chicago Fed conference, and for good reason. And the answer is yes. I think the Fed will start cutting interest rates sometime this summer. I don't know whether that's the July meeting or September, but one of those two. And I think they're probably not going to stop, because even if we get the fabled soft landing, the Fed doesn't just cut rates once. They usually go 2 or 3 times. And then we have to entertain the notion that the economy is slipping into recession. Right now, like the first quarter GDP was really a bit of a hoax. Underlying private demand was really close to 1%. Now it's converging on real GDP in the second quarter, roughly 1%. And my sense is that even if we don't go into recession, the output gap's starting to widen, and that's going to put downward pressure on inflation, which poses another problem for the Fed. So my sense is that rates are going to go down quite a bit more over the course of the next 6 to 12 months.
Yeah, as you know, not everybody is quite as bearish or dismissive of the growth that we've seen the last couple quarters. But even if you say there's been a slowing, would you say it's because of the Fed's tightening last year? I mean, did they do too much?
I would say that that's a big part of it. There's no question that the tariffs and the spreading trade war is obviously an impediment. The comment before about hitting a supply wall on labor, well, that might have been the story in the ADP number that we got today, but there's no question about that either. But I've been saying all along that you're not going to go through a cycle where the Fed de facto tightened policy with rates, 9 hikes, and the balance sheet to the tune of 360 basis points of tightening in the past couple of years. And that influences the economy with lags that are between 12 and 36 months. We're just starting to see that. And that's why it's not just a trade story. The regional banks, up until recently, were back in correction mode. We had a lot of domestic sectors, the small caps, which really have nothing to do with global trade, back in correction mode. A lot of domestic demand sectors telling you the same story that the Treasury market's been telling you for the past several months, which is that growth is cooling off and going to remain that way for some time yet, as these lags.
But David, isn't it also a demand story, David? David, isn't it also a demand story? Vice Chair Richard Clare with Steve Leisman yesterday saying that everybody jumps to conclusions because bond markets are perceived as the smartest in the room when they're standing next to equities, that these dropping yields cause anxiety. I understand that. But when you look at the entire globe, there's a lot of anxiety that ends up as purchases in many of our longer maturities, even though domestic investors rather not surf the curve and they're camping out in the short end.
David?
Well, my point is that the bond market is telling you something very significant about the shape of the global economy, period. And you don't just have to go to the long end, just go to the front end of the yield curve and take a look and see where 2-year notes, up until a couple of days ago, were trading relative to funds at a huge discount. So the market's telling you that the Fed over-tightened. The Fed has got to walk back a good part of those rate hikes that they put into the system.